The 90-day window before every funding application is where the outcome is already being decided. And the people who get approved aren't just smarter or richer. They just know what to do in that window. My name is Justin. I'm not your typical CPA. I focus on business growth and finance. Let's go. So here's the big idea. I want to tell you about a client of mine. She called me last year. LLC set up, EIN number in hand, business account open, working her tail off. She applied for $75,000 in business funding. She was denied. She applied again 6 months later. Denied again. She called me one day. She said, Justin, I don't know what else to do. I keep getting denied. I told her, stop applying. You're only doing more damage. For the next 90 days, do exactly what I'm about to show you. 90 days later, she got approved for $100,000. Same credit score, same business, but a different profile. So today you're getting that exact 90-day plan that I gave her. Check it out. Look, this is real talk. When most people decide they want business funding, here's what they do. They Google how to get a business loan. Then they open up 47 different browsers and they apply to everything all at once. And they get denied everywhere. Then they go back to those same 47 tabs and read the comments section at 2 a.m. wondering what went wrong. Does that sound familiar? I've been there. Your client has been there. The problem isn't that you don't work hard enough. The problem is nobody handed you the correct timeline to use. Today that changes. We're breaking this into 3 months. Month 3, month 2, and month 1, and everything that you do within those months and everything in between. Each month has a specific job. You do the job. The approval follows. Let's build. So before I give you the plan, you need to understand why the 90-day rule is real. CNBC confirmed this week SBA loans, the most popular funding program in America, takes up to 3 months to get approved. The 90-day window isn't a theory, it's a literal timeline. Private credit markets stress just tightened. This means lenders are looking more carefully, not less. The longer or stronger your 90-day profile, the more you'll stand out in a tighter funding market. This is fact. SBA loans also, their rates just jumped from 7% to over 14%. That's a very high interest rate. Now, for people with the same credit score applying in the same month, the difference is just their profile, right? It's the preparation that they take that determines a lower interest rate or a higher interest rate. And lastly, a business owner who opens up just 3 net 30 vendor accounts, and they can go from a 0 business score to a Paydex score of 80 plus. This is a perfect Paydex score. And this is the exact score that you're going to want when you go apply for business funding. The 90-day rule is a real thing. So we start with month 3 where we build the foundation. Month 3 is the most important month of the 3 because it's the one that nobody does. Everyone wants to skip to month 1 and just go apply. Don't do that. Month 3 is where approvals are actually born. So in month 3, step 1, what you want to do is you want to pull all of your business credit reports, all 3 today, right? You cannot fix what you cannot see. And right now there's a file on your business at Dun & Bradstreet, Experian Business, and Equifax Business. Most business owners have never looked at any of them. Some of you have errors. Some of you have old addresses. Some of you have a blank file, which is just as dangerous as a bad one. Remember to pull all 3. You can go get them for free at nav.com. They aggregate this. Do this day 1. So here's your action. Go to nav.com and get all 3 business credit reports for free. Now here's a fact. 72% of small business owners don't know their business credit score. If you just pulled yours, you're already above the top 28%. This is your first win. A DMB has been tracking business credit since 1841. Your LLC could have a completely blank file. You'd never know. until the lender denies your credit profile. Step 2, claim your DUNS number. If you don't have a DUNS number, you are literally invisible to the majority of all commercial lenders. A DUNS number is your business's social security number for the credit world. Without it, Dun and Bradstreet, which 90% of commercial lenders check, they literally cannot find you. So go to dmb.com, claim your number today. It's free. It takes about 20 minutes to go through the application. There's no reason on earth you should not have this. So here's your action. Go to dmb.com, claim your free DUNS number. Now here's the funny truth. The DUNS number has been around since 1963. Your business might be younger than your parents and still not have one. That's the problem we're fixing in month 3. Step 3, open 3 Net 30 vendor accounts. This is the move that actually builds your business credit file. Most people have never heard of it. Net 30 vendors are companies that extend you a small line of credit and report your payment history to the business credit bureaus. Pay on time, and in 90 days, you have a verified payment history. That's what lenders are looking for. The 3 I start with every client are Uline for office and shipping supplies, Quill does office supplies, and Granger, which does industrial supplies. You can go onto their website, you can fill out a Net 30 vendor account, and you don't need to spend a lot. Order something small, pay the invoice on time, and repeat. That's it. Now here's an action step. Open accounts at all 3, Uline, Quill, and Granger in month 3. Buy a small amount of stuff and pay back the Net 30 accounts. And the result is that you'll have 3 active Net 30 accounts with on-time payment history. And that'll give you a Paydex score of 80 plus within 90 days. Paydex 80 is the threshold that puts you in the low risk category for most commercial lenders. You're not borrowing money yet. You're proving with real transaction history that you pay your debts on time. The proof is more valuable than a 750 credit score with nothing to back it up. Now here's step 4. Separate every dollar, personal and business, no exceptions. I know I've said this before, I'm saying it again in month 3 because this is the month to fix it permanently, not in month 1 when it's too late. Every business expense from a business account, every business deposit into checking, zero crossover, starting today, month 3. Now here's your actions. If you don't have a dedicated business checking account, open one up this week. It's very important. The business name on the account, the business address, and the EIN linked. And protect yourself. Set up an overdraft protection immediately. One negative balance day on a 90-day bank statement is enough to trigger manual review at many lenders. Just one day. So I know it was one Uber Eats order after a 14-hour grind, but that $22 decision, that's what a $100,000 approval looks at. Remember to separate your money. Now month two is the strength. Month 2 is where you turn your foundation into a verifiable lender-ready profile. You've opened up the accounts, you separated the money, now you make it all look exactly the way a lender needs to see it, right? So step 1 in month 2, pay every Net 30 invoice early. Here's the move most people miss. They think Net 30 means pay by day 30. The move is to pay by day 20 or sooner. Early payment is actually scored differently in some credit modules. It shows you're not cash strapped. You're not scrambling. You're managing money like a real business. Early payment equals highest Paydex score possible. And that's what we want, the highest Paydex score. So here's a rule. Pay your Net 30 invoices between days 15 to 20, not day 29, not day 30. Pay it early. The Paydex scale, 100 equals paid 30 days early. 80 equals paid on time. 50 equals paid 30 days late. Most lenders want 75 plus. You can hit 80 in one payment cycle if you pay early. Step 2, run the consistency audit. This is the one that hurts most people because it's fixable and almost nobody ever does it. Your business information must be identical across every platform a lender checks. And here's what they check. Your state LLC filing must have your exact business name. Your IRS EIN letter must have your exact business name and your exact business address. Your business bank account. The name must match exactly. Your DUNS profile must have the same name, the same address, and the same phone number. Your Google business listing must be verified and current. Your website, if you have one, contact page must match your LLC. One period missing, one suite number different. To a human, it's the same company. But to an AI underwriting system, it throws up a flag, two different businesses. One inconsistency can delay your approval by 30 days while they verify your identity. Three inconsistencies and you're flagged for manual review. Run this audit in month 2. Fix every mismatch. Now here's the action that you need to take. Go Google your business name, check every listing that appears, make it identical. A single, one name, one address, one phone number. One character difference, LLC versus incorporated, has killed real applications, not because the owner has been dishonest, but the system doesn't forgive typos. Don't be this business. Step 7, maintain business account minimum balance. In month 2, you're building out your bank statement story. Lenders don't just look at your average balance, they look at your lowest balance in the 90-day look back. If your account hit $47 on Tuesday in month 2, that's on the statement, set a floor, a minimum of $500 buffer at all times. Don't let it go below $500. Ideally, $1,000 plus if you can do it. That floor is what makes your statement look like a stable operating business. Now, here's an action. Set a calendar reminder every week. Check the balance, never dip below your floor. And here's a business hack. Some business owners move money from personal savings into business checking temporarily during the pre-application window. That's not fraud, that's cash management. Just let it season for at least 60 days before it shows up on the statement you submit. Month 1 is the most counterintuitive month of the 3. Your job in month 1 is to stop. Stop charging things. Stop applying to places. Stop trying to improve things. The work is done. Month 1 is about executing the application perfectly on the right lender with the right documents. Let's show you exactly what that looks like. Step 1, pull one soft pull check from nav.com. Before any lender touches your file, you should see exactly what they're going to see. Nav.com lets you pull a file, business, credit overview without a hard inquiry. This is your final quality check. Look at your Paydex score. Look at your business profile. Look for anything that still doesn't match. And if you find something, fix it. Then close the laptop. You're ready. Remember, one soft pull, one time. That's it. Don't over pull it. Don't pull it 5 times. Don't check it every week in month 1. Pull it once for the first week, fix anything that's left, and then you're done. Step 2, choose the right lender for your stage. This is where most people get it mixed up. They do everything right, then they walk into the wrong place, the wrong lender. So here's a general map. If you're under 1 year, stick to the micro lenders, CDFI, Net 30 only. These are too new for most traditional lenders. If you're in the 1 to 2 year mark, go to the community banks or the credit unions. They use human underwriters with discretion. If you're over 2 years, you can apply for the SBA 7A loans, online lenders, and regional banks, and you can get full product access. Remember these different types of lenders. Remember, big banks reject 87 out of 100 small business applicants. Community banks and credit unions approve significantly higher rates, especially for businesses under 2 years old. The lender you choose is a strategy, not just a Google search. So here's your action. Identify one target lender this week, community bank or a credit union first if you're under 2 years old. Apply once with a complete file, not twice. Step 3, build your document package. Have it ready before you apply. Nothing kills a strong application faster than scrambling for documents after you click submit. Having all of this ready in a folder, digital and physical, will help you a lot. When a lender asks for something, you can send it in 60 seconds. You look like a real business. When they ask for something, you need 3 days to find it. The deal cools. Documents ready, apply once, get the win. I've watched a $150,000 approval fall apart because someone couldn't find a simple thing such as their EIN letter from the IRS. It's a one-page document. Save it, print it, save it as a PDF, put it in a folder, label the folder. It's not complicated. It's just discipline. Have all your documents ready. This is what a detailed document package looks like. 3 months of business bank statements, 2 years of business and personal tax returns, your LLC operating agreement and articles of incorporation, your EIN confirmation letter from the IRS, business license, if they're applicable and you need them, voided business check, year-to-date profit and loss statement, and your business credit report printout from nav.com. Have these documents ready and accessible. So here's the bigger picture. Let me zoom it out for a second. It's now April 2026. Private credit markets are tightening. Lenders are getting stricter, not looser. And now AI underwriting is the first filter at most institutions. 87 out of 100 small businesses are still being rejected. But here's what the data also shows. The businesses that are getting approved right now, they didn't get lucky. They didn't know somebody. They built a profile over 90 days that gave lenders no reason to say no and deny their application. That's the entire secret. So again, that black business owner in Houston and the Latina owner in Miami, that first-time entrepreneur in Detroit, they all deserve the capital that they need to help them grow. And the only thing standing between them and that capital, in most cases, is information. It's what you know. And that's the plan, the timeline, and the checklist that I've just gone over that will get you that business funding. So now you have the 90-day plan. So the next question is, which specific funding sources should you actually target once you've built this profile? SBA versus community banks versus business credit cards versus business lenders? Which one do you use? I'm going to break that down exactly what you need and where you can get it and who will say yes to your profile. It's in the next video. So watch it right here. It picks up exactly where this one ends. So you can see it's possible. In the 90 days, the 3 months leading up to the date that you apply for your business funding, take these exact steps and you will get qualified for those loans in between $50,000 to $100,000 or even more. And if you've gotten any value from this video, remember to leave a fire emoji in the chat. Don't forget that. Drop that fire emoji in the chat, hit that like button, smash that subscribe button, leave a comment. It really helps the algorithms get this video out to more viewers. To your success. Salud.